Okay, hello. I hope the mic worked today. No problems. Um, Please let me know if there's problem. I hope so. They're not. But in today's video, we're gonna take a look at the S&P, the Nasdaq, the Russell, the dollar, the large tech stocks. We're gonna put it all together. And I'm speaking into the mic. I hope there's no problem. But yeah, it's pretty good. The market in general is it's pretty fun at the moment. So we're gonna take a look at what the next steps are. We have Fed Powell speaking on Friday. Tomorrow is Thursday. Overall, it should be good. All right. So without further ado, let's get started with the video. All right. So first and foremost, this is a chart of HP. HP. This was a swing trade that I alerted for the group. Nice, simple, comfortable 30% trade. Really, really nice. Another swing trade that was popping off today as well was XHB, the home builders ETF. So this gapped up as well, and this shot up almost 40%. So really, really nice swing trades today. Nice and comfortable on these individual names. Really, really nice. I love swing trading. And if you're interested in getting access to these signals as well, to gain access to them, you click the link in my bio or in the comments, and essentially you gain access to my swing trades, my day trades, my education, my mentorship, access to me throughout the day, as well as my trading view indicator. So you want all of that stuff as a package, click the link in my bio and you get access to all of that good stuff. All right, so this is a daily chart of UNG. This is my first thought process. UNG is United States Natural Gas Fund, okay? And it is starting to bottom out, in my opinion. When you look at it on a daily chart here, it has been getting beaten down and it looks like it's bottoming out. The reason why this is important is because generally when these sort of stocks begin to bounce, that's generally a bit bearish for the market. And okay, I hope the mic working. Okay. But when these natural gas companies and things like that start to bounce, it's usually bearish for stocks. And hopefully, we do end up bouncing and it would be good for our puts. But of course, now is not the time to just automatically just keep your bear glasses on and just be very, very bearish on the market. Things can still happen either way in the market, but UNG is starting to bounce, in my opinion. And this is not really a setup to be short UNG. Is this so? Objectively speaking, when you look at a new chart, you have to make a decision. The market can either go two ways, bullish or bearish. Do you want to go short a stock after it's been beaten down like this for a very, very long time? No, clearly not. Like, I'm going to answer the question for you. This is not a time to go short. If it's not a time to go short, therefore, it becomes a better time to go long. We are moving up here, and a bounce is around the corner, in my opinion, on UNG. Therefore, it'd be bearish for the market. So that's number one. Number two, stocks like Apple are starting to get beaten down because of the DOJ news, and that is also not very bullish for the market. And number three, just objectively looking at the S&P here, right? Clearly, this is a lot of buying pressure. To say that this is not good buying pressure is delusional. But there are multiple bearish catalysts. Number one, first of all, we closed and opened outside of the upper level of the Bollinger Band. This is not as clean as if we opened and closed outside of the lower level, all right? Basically, when we're trading outside of the upper or the lower level of the Bollinger Band, it denotes extreme overextension from the mean line. And generally, when that occurs, we need a reversal to the mean. Reversals to the mean occur much, much easier when there is downside pressure from the Bollinger Bands. We get a bounce. It's not as clean when we're outside of the upper level, but we are overextended to the upper side on the Bollinger Bands here, and we are at new all-time highs. We have completely skyrocketed and broken above 520 on the SPY. Everything is there, right? My main thought process is long term, I am bullish on the market. right? Long term, I'm bullish. But in the immediate short term, it's very, very difficult to be extremely bullish in the short term. But, so in the short term, meaning like we should get a pause or a bit of a pullback. But now to make things even worse, right? To make things even worse, Powell is going to be speaking on Friday. And quarter one ends in a few days. So with quarter one ending in a few days, this could just be a bunch of BS. The market can continue to rise up into quarter one's end. It'll give funds and banks enough window dressing to basically show, oh wow, look at our quarter one returns, blah 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 blah. Let's just look at how the SPY has been doing so far for the year. Okay. So far for the year, the SPY is up 10% basically. And that is 10% for the quarter, which is pretty substantial. And yeah, that's it gives good brevity to funds of their returns, right? So that is one other thing to take into consideration. We could have a periodic bounce. We could have a bounce into the end of the quarter, but overall, I am bearish April and May. I do believe the market should get a pullback into the end of April, sometime in May as well, because tax loss selling. There will be some point where people start selling their stocks. The market in general right now is very, very overextended. It makes absolutely no sense to start leaning long here. It doesn't really make sense to be leaning long. We have Meta. Meta does look bullish. We have Tesla. Tesla looks bearish. Google, AMD, and Nvidia are starting to consolidate, and they're holding up, right? So Google is consolidating a bit. Nvidia is consolidating a bit, still here, right? AMD gapped up and it pulled back lower. It bounced off of that 174 level absolutely perfectly. And we gapped up to 186 and we closed down to 178. But overall, guys, just naturally thinking now, just thinking about sentiment. Overall, the sentiment, all of the people that were bearish are now starting to become bullish. You have to be a complete idiot to start becoming bullish right now. And becoming aggressively short right now, also in the short term, is also not safe. We could still, on the market, in my opinion, move up a little bit. We could easily move up a little bit, right? And at that point, what happens? We could move up, just move up into the end of the quarter. The people that are trying to short this will end up becoming more bullish over here. But things, in my opinion, the market will end up falling below 510. It will retest 500 in the next few weeks, in my opinion. And just all in all, from a risk reward standpoint, the risk reward is not there to the long side, in my opinion. And these other stocks, UNG looking bullish. The fact that the bonds have not caught any of this upside potential, because the bonds share, if the bonds are moving up, then the stock market is also moving up. The fact that off of this big move into new all-time highs, the bonds did not move, is not a great sign for the market. And a lot of this move to the upside had a lot to do with, number one, it was VIX, and then of course number two, because Powell's speech. Powell is speaking again on Friday. I don't know if he could say anything again that will cause the market to rip to 530. But of course, that is yet to be seen. We're going to take it one day at a time. Our swing trades are working pretty well, regardless. So are our day trades. Our day trades are working really, really well. Like, that's obvious at this point. But yeah, so if you guys want access to all that stuff, click the link in my bio or on the comments. Gain access to all of the things that I mentioned. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.